Hello traders, how are you? Vladimir here from Home Trader Club. Welcome to 2024. This is the first weekly forecast of a new year, and with this opportunity I would like to wish you and yours all the absolutely very best in this year. First of all, health, peace, love, lots of reasons to laugh properly, truly, lots of reasons to enjoy, to smile, and to be thankful and grateful for. I hope you had very good holiday season break. I hope everyone is well on your side, and I really wish you a successful year ahead. And now let's begin with the first weekly forecast. The first instrument I want to start with would be the dollar yen. Before we go to the charts, I would like to thank EightCap broker for supporting me, this community, this channel, and for their amazing offers they have together with us for the community. To enjoy the special offers of your choice, please refer to the link below this video in the description. So while the dollar yen is a little bit, I would say, in between of uncertainty for the long term, because I would not be surprised to see dollar yen trying to make an absolutely all-time high once again before the move down. However, as I said, the long term for me, it's in a zone of uncertainty, but on the short term I believe we could have great opportunities for both buys and sell from specific levels. So let's take a look what did we see in the dollar yen since the end of 2023 and the beginning of 2024. After making and completing the massive rally, we got the two false breakouts we were following in the previous weekly forecast, and finally we got a strong move down. The strong move down went all the way to this, back to this rising supportive line, and not too far from this very strong demand area, zone of buyers we have here surrounding of the 140, the round psychological level. On the Bollinger Bands, on the lower Bollinger Band on the daily chart, we were riding for more than 20 candles ride, which right now we complete the rally to the opposite band. Before that, I mentioned that for me it is right now in between buys and sells, so I want to mark these levels exactly. Well, here is what happened on the 4-hour chart when we go down from the daily. We completed 3 bearish waves. These 3 bearish waves completed a break above the falling resistance line. But mostly, here is what I like to see. We got a lower lows on the chart with higher lows on the MACD indicator, completing beautiful bullish divergence. After that, again, the break of the falling resistance line, and what I like to see here is this push in sort of 3 waves to the upside, which on a lower time frame you would see a bit cleaner. At the moment, there are no conditions against, which usually means buy the dips could provide further short-term buys. And that's why I said before, we have both reasons for buy short term and sell short term from specific levels. What are these specific levels? This is the first key zone, this inner zone. Rally, some range, right, and breakout. This would be the first key zone. It was tested once, it might be retested the second time, and from there we can see the pair trying to make the next rally. Okay? This is the first important zone. The next important zone is the previously broken low with the resistance that it created. So low of support became to be a high of resistance. We can also see here, based on this KTLI indicator, volume profile based indicator, we can see a very strong volume profile zone based on the weekly chart and 4-hour chart. You can see the control we have right here. This is the weekly chart and this is the 4-hour chart. Both create absolutely strong area. Okay, so these dips on a short term could provide us the buy. Now, I mentioned before, there is also an option for the sell, and the reason for that is basically the structure it does on a daily chart. After the two false breakouts I mentioned before, we start to make lower lows, then lower lows again. Okay? So the zones of sales would be basically all these areas where the sellers took control. So if you think about that, this low was broken, the previous high, zone of interest, first zone. Okay, then we have this massive spike, again, sellers. All that creates a first zone. The next high is slightly higher here, together with this high, which is the first high of the pullback of this move down. Again, creates for us a classical sell zone. So if dollar yen managed to rally towards this area that we can see on the charts, from there we might be looking for the sells. Now, the ideal scenario for these sells would actually be that after the pullback we get the rally towards the mentioned zones, and from there we would be looking for the next conditions. Higher highs on the chart versus lower highs on the indicator, which should provide a beautiful sell opportunity. So this is my observation for the dollar yen on a short there. Let me know how do you see and what would you expect to see from this pair in the comment section below this video. The next pair I want to talk about would be the euro pound. But before I continue, I would like to ask your support. If you find value in the video and trading opportunities and you appreciate the knowledge I'm here to share with you, please hit this like button. Feel free to share with anyone who you believe can benefit watching this video and hopefully learn some very important nuances in trading. If you are new to this channel, I would like to ask you and to invite you to subscribe to our channel with the subscribe button below this video. Of course, thank you very much in advance for your help. Now let's continue. So on the long term, the euro pound has absolutely not much to sell. The only thing I personally like here is judging the range and the way it was developing. We are in a very, I would say, equal, after this false break was completed, we're in pretty much equal developing cycles. And if this view is correct, I would expect that this leg down towards the bottom of the weekly range eventually to be completed. Okay, so inside the range, what we do currently have is basically lower highs. We don't have any other structure, right? For me, it means that there is more pressure to the downside rather than to the upside. The most recent rise, why do I draw it so ugly? The most recent rising supportive line was broken after these waves. Yeah, what happened since is we got a retest, and for many weeks this zone is rejected over and over and over and over again. This is usually a strong technical sign. If we take a look what happens after the break of this rising supportive line, we can see that the market is making here a sequence of lower highs, lower lows. Again, a pretty strong bearish sign as is. And if we go to the lower time frame, here is what happened since here. Okay, same story like with the weekly. We can follow up again with the daily. After the sequence of higher highs, higher lows, we got the break, we got the rally almost to fully retest, and again this zone of sellers was classically rejected. The most recent divergence on the daily chart is bearish hidden. If we compare these lower highs, lower lows, to validate it, we need to make sure this first move down has valid bearish trending structure. For that, we can use the same daily chart or 4-hour chart to make sure we have a sequence of lower highs, lower lows. observation on the 4-hour chart show us that we do have a sequence of lower highs, lower lows. So therefore, for me, this was the rally which completed a bearish hidden divergence on a daily chart. And what I love to see here, that after the sequence of higher highs, higher lows of the correction, we got fake high, and then the price flips to make lower highs and lower lows, starting with lower lows, of course. Then again, regain the bearish structure of lower highs, lower lows, at the moment without any ending signs, which for me means sell the rallies. First key zone to watch would be this inner zone that starts to build up the sells. The next key zone would be basically here, this volume profile based zone and the spikes. You can see here spikes, a lot of spikes, which means a lot of sellers actually took control from this area. As long as these two zones are in a hold, any rallies here for me would mean look to sell further, at least to retest the previous lows, and very likely much further based on the weekly chart, where we saw the bottom of the range as a legit possible target. Let me know, what do you think about the euro pound? Are we going down, or was that just a trap before the buyers return and we see the price rallies? Let me know your view, your thoughts in the comment section. And the final one, pound kiwi. What I love to see here on the pound kiwi is these double cycle conditions. We got two waves to the downside, while the second wave bounces and respects the area of 61.8 Fibonacci expansion. Besides that, there is a bullish divergence condition. Lower lows on the chart with higher lows on the MACD indicator, while RSI indicator creates the same condition. Classical bullish divergence. Interesting part here is this volume profile based zone together with the 200 dynamic moving average and the 50 moving average. This golden zone of a potential coming cross should be, or technically speaking, creates a classical magnet based on the price, and there is a great chance we should see the price going inside this area. Moreover, if we plot Fibonacci retracement on a double cycle, we will see that this zone falls exactly on 38.2 Fibonacci, and these spikes which represent zone of sellers, and broken support which now is a resistance, and huge volume profile based area. So for me, there is a great chance we are going inside this area. Dropping down to the 4-hour chart, we can remove the Fibos, we don't need them anymore. Dropping on a 4-hour chart, and after the bearish move, the sequence of lower highs, lower lows, the condition of a reversal completed, two fake lows under bullish divergence, while the market was making lower lows, indicator making higher lows, same for the RSI, and then the higher highs in a row. So for me, that is a classical condition of buy the dips. Broken resistance that became a support down to the previously broken resistance that became a support already creates for us an absolutely classical trading zone. I expect to see the price going inside. Ideally, we should see higher lows on the chart versus lower lows on the indicator to complete bullish hidden divergence, and from there the rally towards the mentioned zone before. Buy the dips is my trading plan on pound New Zealand. Let me know, how would you expect to see the pound New Zealand reacting from here after respecting the level of 2, classical round number? Are we going to 205, 206 first of all, or was that just a fake rally before the price breaks down the level of 2 and continue all the way lower. Share with us your thoughts in the comment section below this video. That's it for the first video, first weekly forecast video of 2024. I would like to take the opportunity and to thank you for your time watching this video. As always, I hope you found value in it. Please hit the like button if you did, and subscribe to our channel if you are new to this channel. And also I want to invite you to our trading family, the Home Trader Club, where you will get your access to full courses, real-time trading education, real-time trading opportunities, access to the community, comprehensive media zone, tools, and so much more. Join our family with the link below this video. Once again, thank you for your time. Best to you and yours in this 2024. Love and peace, mainly in health, of course. And I'll see you soon with more. Good trading. Bye for now.